Are you ready to cut through the noise and sharpen your trading skills?
Join financial experts David Lin, Steve Hanke, and Emily Brown as they delve into the intricate world of trading, minus the political distractions.
Our AI-powered summaries distill their valuable insights into concise, actionable strategies that save you precious time.
So buckle up. David Lin starts by breaking down the risks of mixing trading with politics. Crucial information you won't want to miss.
And stay tuned for more. Steve Hanke and Emily Brown reveal even deeper insights into market trends and predictions.
Just a reminder, this content is for educational purposes only and not investment advice.
Today, we're discussing trading strategies without the interference of politics, as covered by David Lin in the Crowded Market Report.
David emphasizes the necessity for traders to rely on technical factors rather than being swayed by political developments.
David Lin warns of the dangers that arise when traders mix politics with trading.
He points out that political events can create distorted perceptions of market realities. David suggests that traders should focus on technical analysis, emphasizing price movements and historical data.
By identifying key support and resistance levels, traders can make more informed decisions. According to David, economic indicators frequently dictate market movements more strongly than political announcements.
He insists that traders must analyze these economic data before making trading decisions. David highlights the importance of emotional detachment in trading.
He advises that traders should avoid making hasty trades based on reactions to political news. David predicts that markets can remain resilient even amidst political chaos.
He encourages traders to focus on fundamentals, stating it can lead to more successful trading over the long term.
In conclusion, David encourages traders to maintain focus on technical analysis instead of getting distracted by politics.
He reinforces that recognizing the importance of economic data in trading decisions is crucial.
Additionally, discipline and emotional detachment are key components of a successful trading strategy.
Traders must continue to adapt and refine their strategies amidst the changing market landscape.
Today's session on Trade Brigade discusses the significant movements in Tesla's stock following Elon Musk's recent price upgrade and announcements from Donald Trump.
These factors have combined to create a noticeable shift in market sentiment surrounding Tesla shares.
Analysis from Trade Brigade highlights how Trump's recent comments have sparked investor enthusiasm.
Musk's price upgrade appears to strengthen this positive outlook on Tesla's prospects.
We discuss the essential role political events play in affecting investor mood.
Experts note that announcements from Trump often precipitate quick reactions in stock performance.
Musk's vision emphasizes a promising growth trajectory for Tesla, citing technological advancements.
Such insights foster a favorable outlook among investors, indicating Tesla's significant potential for growth.
Market expectations indicate that Tesla's stock may experience short-term volatility.
Reactions to Trump's comments may greatly shape how investors respond.
Analysts predict a constructive trajectory for Tesla stock as we look to the future.
If political and market circumstances converge positively, expectations for stock growth may be realized.
Ultimately, staying informed about political trends is crucial for Tesla investors.
Understanding the interplay between long-term growth and short-term volatility is vital for navigating Tesla's market landscape.
Today, we will analyze Steve Hanke's insights on the economic situation and the outlook for gold prices.
Hanke indicates that rising economic issues could lead to a substantial increase in gold prices.
Steve Hanke believes inflation and fiscal policies are threatening economic stability.
David Lin observes that this sentiment is widespread among financial analysts. Hanke stresses the role of gold as an investment during economic downturns.
This trend reflects a broader movement towards secure assets. Hanke identifies inflation as a major contributor to worsening economic conditions.
He criticizes the Federal Reserve's ability to effectively manage these challenges.
Given Hanke's predictions, what should investors expect for gold prices next?
Hanke suggests that gold could rise significantly, signaling a shift in investment strategies.
In summary, Hanke's insights support the case for investing in gold amid uncertainty.
Lin reiterates the importance of monitoring economic and inflation developments.
Today, we're examining market trends discussed by Emily Brown.
Emily highlights concerning trends that could impact investors.
Emily Brown states that equity markets seem overvalued.
This overvaluation raises the chances of a correction, according to her analysis.
What does Emily say about rising yields?
Emily clarifies that as yields rise, borrowing becomes more expensive for firms.
How is investor sentiment changing?
Emily notes that many are moving towards safer assets due to market uncertainty.
What predictions does Emily have for the market?
Emily forecasts potential corrections, emphasizing ongoing volatility.
What recommendations does Emily have for investors?
Emily suggests monitoring yield trends and considering diversification.
Today, we're diving into an analysis presented by George Gammon regarding the tight labor market and its potential effects on the stock market.
George emphasizes the labor market dynamics as critical to understanding stock market challenges.
George Gammon argues that a tight labor market is putting upward pressure on wages.
He believes that rising labor costs may significantly squeeze corporate profits. According to George, rising wages are expected to strain profit margins for many companies.
This situation could force companies to make tough decisions, such as layoffs or a slowdown in hiring. George recommends that investors reassess their strategies based on these labor market changes.
He highlights the importance of identifying sectors that may withstand wage pressures better.
George predicts heightened market volatility is likely due to these labor market pressures.
He cautions that investors should prepare for possible corrections as companies adjust earnings outlooks.
In conclusion, George emphasizes the importance of monitoring labor market trends.
He believes these insights are vital for constructing effective investment strategies going forward.
Today, we're examining insights from Emily Brown regarding the record amounts of Treasuries being purchased by foreign investors, as discussed with David Lin.
Emily highlights how this trend could signal larger economic movements and what it means for market stability.
Emily Brown notes a notable surge in foreign purchases of U.S. Treasuries.
She asserts that this shift indicates changing global investor confidence regarding U.S. economic conditions. According to Emily, growing foreign investment in Treasuries often signifies global confidence in the U.S. economy.
And how might this impact interest rates?
Emily argues these investments could lead to lower interest rates, stimulating borrowing.
Emily also discusses how these trends may lead to market instability.
She stresses the importance of preparing for rate fluctuations as more capital enters the Treasury market.
What predictions does Emily Brown have for the Treasury market moving forward?
Emily predicts ongoing demand will keep yields low, though unexpected shifts could induce volatility in both Treasury and stock markets.
In conclusion, Emily Brown underscores the necessity of monitoring foreign purchases of U.S. Treasuries closely.
She advises investors to prepare strategies for potential rate changes and the associated market volatility.
And that's a wrap. We've gathered some incredible insights from our experts.
Absolutely. From Emily Brown's take on Treasury trends to Steve Hanke's perspective on gold, each guest provided depth and context.
What really stood out to me was the agreement on volatility across the board. No one can deny it's a turbulent time.
Right? But the disagreements were just as interesting. Emily sees the Treasury market as critical, while Hanke is all about gold.
And George Gammon tying in labor dynamics, such a vital angle. It just shows how multifaceted this situation is.
Indeed, viewers, with all these varying insights, it's crucial to approach your financial strategies with a well-rounded perspective.
If you love diving into this financial discussion, make sure to give us a thumbs up and subscribe.
Your support is what keeps us bringing you more expert analyses to navigate these uncertain times.
Don't forget to check out our next episode about global trade dynamics and market implications. You won't want to miss it.
Thanks for joining us today. Keep your minds open as you navigate the financial markets.